The broadcast is now starting. All attendees are in listen-only mode.
Good morning and afternoon, everyone. Welcome to the Retail Pro webinar series. Our guests for this morning's webinar are from Wolters Kluwer and DMA, organizations that some of you maybe not have heard of. However, they provide a lot of value to the retail ecosystem, specifically as far as the tax issues are concerned. As you know, tax environments, especially for those of you who are retailing across borders, are dicey little things that you always need to keep tabs on, the regulation changes and the evolutions of the ecosystem. However, there are organizations out there that make continuing to stay in sync with state requirements a lot easier. So specifically, our guests today are folks who focus on working with tax professionals across all the different markets in the U.S. And understanding the business challenges and the workflow needs, and really understanding how can you structure your business to remain in state tax compliance the best way possible, and then convert that into the retail technology solutions that you can deploy in your businesses. So it's my pleasure to introduce Corey Barwick with Wolters Kluwer and Sona Akhmajian with DMA. Sona?
Thanks, Alexandra. I appreciate the introduction. Good afternoon and morning, everyone. Welcome to the ins and outs of sales tax. We'd like to take a moment to thank each of you for attending, and also Retail Pro for coordinating this session. As a brief item of housekeeping, we will be taking questions throughout the presentation. If you have any questions, please feel free to ask those in either the questions area or the text chat on the right-hand side of your screen. Next slide. So what are we here for today? Today we are going to cover some of the more tricky areas of sales tax for retailers. You should note that these issues are not faced just by traditional retailers. E-tailers, or those retailers that operate exclusively online, also face the same issues, some to a lesser extent, but they still face these issues. You can see from the topics that these are everyday problems that retailers, they should be relatively familiar with. They should be relatively familiar to you, even if you don't know the sales tax implications. Next slide. So a little bit about myself. My name is Corey Barwick. I'm a technical product manager for Wolters Kluwer. My primary responsibility is managing the entire portfolio of Wolters Kluwer sales tax products. I've been in sales tax now for about 15 years, primarily worked in public accounting and then came to the software industry after that. A little bit about Wolters Kluwer. We've been around for more than 100 years now. Many of you may be familiar with us under a different name. We used to be CCH. We've had several rebrandings since the CCH name was being used, so we're now Wolters Kluwer. We are a leading provider of tax, accounting, and audit information to tax and accounting professionals since 1913. From a solutions perspective, Wolters Kluwer offers many different products to meet the sales tax needs of businesses of all sizes. From rate tables and research products to full-blown bolt-on calculation engines, Wolters Kluwer has established itself as a leading provider of sales tax solutions to businesses of all sizes. My co-host today will tell you a little bit about herself and Dushar McMillan. Sona?
Thank you, Corey. Hello, everyone. My name is Sona Akhmajian. I am the Director of Strategic Alliances here at DMA. I've been in the sales and use tax industry for more than 25 years as an auditor, consultant, product manager, automation specialist, and now strategic alliances. A little bit about Dushar McMillan and Associates, or DMA. We are an extension of the tax department. We provide many tax services from property tax, state income tax, sales and use taxes, and also tax technology. We've been in business for nearly 45 years. We have more than 425 professionals across the U.S. and Canada with 26 offices. As part of the tax technology practice, we have technical resources, we have functional resources. We help companies automate their sales and use tax processes. We also develop, sell, license, and implement software. Retail is a very strategic industry for us. We consult in this space and have consulted for many years.
Great, thank you, Sona. So let's set the stage with some sales tax facts. Did you know that in the last 12 months, 17,713 tax rates have changed? Did you get all those? How about in the last 12 months, there have been 63,128 changes to the definition or taxability of certain goods and services? How about those? Did you get them? Complications for monitoring and updating tax rates and rules aside, one of the problems with all of these changes is the consumer. Today, consumers are very educated when it comes to sales tax. They generally know what the tax rate is in the area where they live, and they have a general idea of what goods and services are taxable and what are exempt. This has been proved by two very recent large class action lawsuits, one against Walmart for refunding the incorrect tax rate to customers returning goods to stores different from where they purchased them, and another more recent case against Whole Foods where the company's practice of accepting coupons led to sales tax being overcharged in a number of cases. Educated consumers are becoming a big problem for retailers that don't fully understand the tax environment that they're selling. Next slide. We all know about sales tax holidays, and we'll get into those in a little bit more detail later in the presentation. But here's another sales tax fact. Did you know that each state defines school supplies differently? To the layman, it seems like school supplies are school supplies, and they would include things like paper, notebooks, pens, pencils, and textbooks. But look at a state like Alabama, where they bifurcate textbooks from other school supplies and impose a different limit on what is taxable versus what is not during a sales tax holiday. Next slide.
And actually, Corey, when it comes to sales tax holidays, it's interesting because it's not just organizations keeping track of what those holidays are. State levels release them so late in the period that it really complicates things that much more for retailers.
Right, definitely complicates things when the states are very slow to react to their sales tax holidays. So I definitely agree with that. Continuing down the rabbit hole with some sales tax holidays, did you know that in 2014, 17 states had some form of a sales tax holiday? There are currently projected to be 16 states offering some form of sales tax holiday in 2015. To me, I'm going to bet that that number will jump to 17, as Massachusetts is notoriously slow at announcing their annual back-to-school sales tax holidays. Sona, what do you think about that?
Yeah, I think the number will increase, and ironically, another trend we're seeing is that tax holidays are no longer at the state level. Even the local levels within states are releasing tax holidays, and I think from a retailer that is manually maintaining that, it becomes a maintenance nightmare.
Yeah, that's very true, and especially when you have states like Alabama where their localities opt in and opt out of sales tax holidays on a regular basis.
Exactly. Thanks, Corey, for painting that picture. And as you can see, sales and use taxes are very complicated, and they're becoming even more complicated. A lot of the state authorities introduce new rules without understanding what is involved in a retailer being able to implement that new requirement. So definitely a huge challenge for retailers out there. The whole industry is going through a lot of transformation, and what we find is that the tax professional or the individual that's responsible for taxes within a retail organization is kind of caught in the middle of multiple environments and things happening. For one, they have to deal with state authorities. We know that states are becoming more aggressive. They all want to increase their revenue streams, so they're looking for new ways to tax situations and assessments in audits. And a lot of times retailers will tell us they pay audit assessments not because they owe it, but because they cannot defend it. From an auditor's perspective, everything is taxable unless proven otherwise. So there's usually assessments that shouldn't be warranted if you have the appropriate audit trail to support a certain position on why you didn't tax a transaction. So along the same lines of states becoming aggressive, another trend we're seeing is that states agencies are sharing information. Nowadays, what you find is when an auditor is coming in to audit you for sales tax, they're also auditing you for other types of taxes. So they're trying to get more efficient. And what is even more scarier is that some states will hire a third party to do the audits, and they usually compensate them on a percentage of assessment. So as you can imagine, these consulting firms are assessing retailers and other clients as much as they can because they want a higher compensation. So clearly the whole government authorities is a huge challenge. But at the same time, as Corey said, consumers are very educated and have high expectations. They expect different ways of shopping. The whole omni-channel, multi-channel environment has taken even the sales and use taxes to a different level. Consumers want to buy anywhere, ship anywhere, and return anywhere. And at the same time, retailers want to ship from warehouses, local stores are being used as distribution centers. So these multiple ways of doing transactions are really complicating things from a sales and use tax perspective, because traditionally a unique store had one rate and that rate only. But now with send sales and other ways of doing transactions, that point of sale system in a single store needs to have rates to everywhere else they're shipping and where they have reporting responsibilities. So all these different events are making things a lot more complicated for the tax professional in a retail environment.
So now, are you finding that there are specific states that are sharing information more than other states? Because I agree with you, auditors definitely talk to each other and they definitely are sharing information. But have you seen it, isolated to certain areas of the country?
There are a handful of states that will do that. For one, Corey, they come in and audit for sales and use, but they're auditing for business licenses at the same time. Or, what you find is an IRS auditor going in, and if they find a huge liability, they'll notify the state level. I know that California, for example, does that. So they're getting more efficient. They're introducing technology in their audits to make it even more efficient for them. I think their goal is to increase the revenue they recover per hour an auditor spends.
Definitely, definitely.
So some of the retail pain points, for a tax department, what we hear from clients is that the #1 issue is being able to maintain their tax rates, rules, and locations. And what we find in a typical retail environment is individuals in the tax department or other areas in accounting will Google rate changes, will perhaps subscribe to a database of rate and rule changes. They're manually trying to identify any rate or rule changes in the jurisdictions they have stores in. And just referring back to some of the facts Corey presented, with 17,000 jurisdictions and 60,000 product changes, I mean, this really becomes a big bear for most tax departments. Another challenge they have is different systems, none of which are talking to one another, and missing controls and validations. And they're in an audit, they cannot defend why a certain change was made in a system, which increases audit assessments and Sarbanes-Oxley compliance. The typical tax professional is responsible for taxes, but they don't have the visibility and control over the over those changes. So, for example, they'll identify a rate change. They'll log in a ticket with ID, or even email them or call them and say, in this store, this rate needs to change, and they lose visibility at that point. If they did it make it there? Was it correctly? Was it timely? They oftentimes find out 30 days later when they get the monthly data back, if they're lucky, or during an audit or a customer complaint. So definitely a lot of manual process in a typical retail environment, which is causing a lot of pain for them. They don't have access to good data. Everything is summarized, so they not only don't have access to data at the right level, oftentimes timeliness is an issue for them because they need to file those tax returns, and they always struggle getting the data out in time to do that compliance. So definitely a lot of challenges that we see out there for a typical tax department. Corey. So Corey's going to dive into a little bit more details around sales tax holidays. Are you with us, Corey?
I'm here, Sona. Sorry, I was on mute
Okay.
there. So we are going to dive into some of these details now. The first thing that we want to talk about and take a closer look at is sales tax holidays. A sales tax holiday is when a state or local taxing authority will allow retailers to sell goods without collecting tax. These occur during certain periods of time during the year. States do this in an effort to not penalize individuals for buying necessary items. The biggest of these types of holidays are definitely back-to-school holidays, but there are others as well, including weather preparedness and even firearms. The problem that a sales tax holiday creates for a retailer is that it is only for a certain period of time. So not only do retailers need to know the general taxability of the goods that they sell, they also need to know when and if during the year the states where they do business are going to allow a sales tax holiday on those goods. Add that to the ever-growing list of things that a retailer needs to monitor in either a traditional or online environment. A retailer of any size needs to pay very close attention to sales tax holidays. The reason for this is the sheer volume of sales that are made on sales tax holiday weekends. Be it selling thousands of notebooks for a back-to-school holiday or a generator for a weather preparedness holiday, these items typically represent either a high volume of units moved or a high value to each unit sold. Experience has shown that when either of these things are present, sales tax can quickly become a challenge to even the most seasoned tax professional. And finally, there is the timing, as Sona and I were talking about a little bit earlier, from when the states announce a holiday. For the most part, states are pretty good at letting their citizens know when a sales tax holiday is going to occur. They do this well in advance of that date. However, there are notable exceptions to this where a state will wait until the very last minute to announce a sales tax holiday. One that comes to mind for me is Massachusetts, where they typically don't announce their back-to-school holiday until a couple of weeks before the holiday weekend. Next slide. SIN sales, or those sales that originate from a store but are shipped to the purchaser at a different location, represent probably the most complex sales tax challenge facing retailers today. In general, retailers are pretty confident that their POS system contains the correct rate or rates for the location of the store. But what happens when that store ships something to a customer? Traditional sales tax law dictates that sales tax is due where the goods are shipped or where the services are provided. Following this through as it relates to SIN sales, a retailer would be responsible for knowing more than 10,000 possible tax rate combinations that exist across the United States. The question that comes up is, where do I collect tax? Am I even responsible for collecting tax where I ship goods to? Needless to say, SIN sales are beyond the scope of a traditional POS implementation. POS systems typically are programmed to only care about the tax rate and rules where the POS is actually located. Current POS systems are very limited in the data that they can accept to process these types of transactions. As SIN sales become more prevalent in the traditional retail space, complexity around the sales tax function will continue to grow. Next slide.
Actually, Corey, I think sense sales is one of the drivers pushing a lot of retailers to look for a more automated solution, because it just increases the volume of rates that they need to have at the register dramatically.
Yeah, definitely. And when you think about, more than 10,000 possible jurisdictions out there, that's just unmanageable in a manual process.
Right.
What we really want to bring your attention to on this slide is the disparity that exists between state and local governments. Yeah, it's great to know that more than 17,000 tax rates changed over the course of 2014. It's equally as great to know that more than 60,000 changes in product definition or taxability rules occurred. But most of these changes were not at the state level. Rather, they were local governments phasing in and phasing out tax rates and rules. It's very important to remember to pay attention to these local governments. In some states, local governments are granted so much autonomy that they create their own product definition and taxability rules. Take, for example, Louisiana. Medical equipment is not taxable in the state of Louisiana. However, due to the home rule nature of the Louisiana parishes, many local governments have adopted a definition of medical equipment that makes it taxable at the local level only. Going back to look into our POS system, most POS systems are not capable of doing these types of complex tax calculations on their own. They are only capable of holding one rate and one rule per item. As traditional retailers begin to move more into a space where customers are demanding that goods be delivered to specific places, the concept of sin sales is getting more and more complicated with each passing day. Remember that your consumers are very educated and they know what they should be paying in tax. It's up to you to make sure that your POS system is capable of handling the nuances of sales tax. Next slide. Finally, let's talk a little bit about the process of filing returns. In today's decentralized POS environments, companies are finding they need to process more and more disparate data feeds. One store sends data in one way, another store sends it in a completely different way. Fortunately, software has made decentralized data gathering less of a concern when it comes to preparing returns. Most software on the market today allows for you to set up multiple different imports, and then they take the data and consolidate it for reporting. But what if you don't have software? You're intimately familiar with this disparate data issue. Further, you are even more aware that sometimes the data is not detailed enough for you to prepare an accurate sales tax return. You're also intimately familiar with the fact that you have a person or persons on staff to prepare and file your sales tax returns for you. But here's the crux of the issue. Manual intervention into the returns preparation process is error-prone at best. So how do you get to a point where you're able to overcome all of these issues? Sona's now going to walk you through an all-inclusive solution that addresses most of these issues that we've covered here today. Sona?
Thank you, Corey. DMA developed a solution to address the unique needs of a POS tax solution after consulting in the space for many years. And we combined this solution with the wonderful and strong content provided by Wolters Kluwer to really offer an end-to-end solution. Clients are looking for a number of things to be addressed as part of a solution. First, they're looking for, I want accurate content. So I want rates, I want the taxability of the products. I can't manage that on my own. Send sales, I need help maintaining that content, and tax holidays. So now they have the content, which is wonderful and provided by Wolters Kluwer, but they also want a means by which to get it into the point-of-sale system. So they're looking for that integration or that automation. They want a means by which they can take that content and push it down to the point-of-sale system. And additionally, they're looking for someone to maintain that integration. So DMA, if we if we build an integration to Retail Pro, we would support and maintain that for future releases. So that's kind of what they're looking for. But on top of that, they're looking for the visibility and control. They want to be able to identify who made what change and why in the system. In other words, they're looking for that workflow management. They're looking for reporting at the granular level they don't have today. And overall, what they're looking for is to mitigate not only audit, but the business risk to avoid those class action lawsuits that Corey was looking for. So in designing our solution, we took all these components into consideration. And we built a solution that's called Tax Interchange for Retail, which has these 4 components. First, we provide a dashboard. The dashboard is a view of everything that matters to a retailer. And it's role-based, so what you see in the dashboard varies by who is logging into the system. And some of the information there is informational, others require an action item. And you will only see what matters to you. So you're not going to see anything that in states where you don't have stores, and you're only going to see product changes that apply to your business. The other component is the workflow management, and this is where the tax department can see who made what change, when, and why, which becomes an amazing audit defense tool. It is role-based. There's email alerts to notify you of action items that you need to perform, and there's complete audit trail end-to-end. The other area of functionality is reporting and compliance. We do a recalculation to get the detail level taxes that the tax department is looking for. We write it into our database. We allow reporting off that. The system comes with 20+ standard reports that fall into 2 categories. One is configuration reporting. The other is transactional reporting. We also have the ability to do custom reports if there's any gaps between what a typical tax department wants versus what we offer. And the 4th component is integrations. When we refer to integrations in our solution, this is not a real-time integration. There's scheduled processes and jobs that run on a predefined frequency based on the requirements of our clients. So most choose to run it nightly, others may choose to do it weekly. But this is the mechanism by which our system communicates to the point of sale and then back to our system again. And if we build an integration, we also support and maintain it, which is a very unique and different offering. So what is the workflow in a typical retail tax department with this solution? So we start by the tax professional or the individual that's responsible for taxation. They access our solution, Tax Interchange for Retail, through a web portal. And through this web portal, they access the solution that has configurations. Where do I have collection responsibility? What are my store locations? The tax content, which is the Wolters Kluwer research. The system also has a means by which it brings in the item information. So it allows the tax professional to do the mappings. And the mappings could be as granular or high level as the tax professional needs it to be. So at this point, we have everything we need to send to the point of sale system. We know what the product mapping is. We know the rate and rule changes, what jurisdictions apply, and we know the POS format. So what we do is we create a file that goes to the point of sale system in a format that Retail Pro can accept. We are not impacting current processes. So there is a current process to push discounts, pricing information down to the point of sale system. There's also a process by which transactional information, generally the summary level, goes back to the general ledger, and some kind of a data or sales repository. So we're not impacting that process as well. But what we are doing is getting the data out of that repository, and sometimes the GL, we do a recalculation and write it to our audit file. And once we do that, the tax professional has the ability to pull the data as part of the generic reports and use it for audit defense purposes, filing purposes, and strategic planning purposes as well. So what does this solution really do? What it does is it gives the tax professional the visibility and the control and helps them achieve automation, while it reduces the dependency that they have on IT professionals to maintain rate and rule changes, to run reports and other things. And what we find is that our application is not only used by the tax user, but also IT, because there are certain components that IT is going to want to control, such as how often do I run those processes? What does that process look like? So all that information will be managed by the IT professional. So that's an overview of what DMA has developed jointly with Wolters Kluwer to address the complex needs of the typical retail industry. And we're really excited about the solution, and we think it addresses a lot of the pain points that a typical retail tax professional and as an organization they have to minimize not only audit risk, but to be compliant and reduce the business risk as well. We are going to be taking some questions at this time. Let's see here. One question we have is, what kind of time savings are your customers seeing as a result of working with this tool? So that's an excellent question, but so they're seeing time savings in a number of different areas. First of all, they're seeing a time saving because they have the content. They don't need to manually research the solution, the tax and rate changes, the tax holidays, and manually entered in the system. So depending on the client, there's very significant time savings, but in addition to time savings, there's reduced audit assessments and so on. Corey, do you have any thoughts on that?
I do. I think that that's a very good comment there, Sona. I agree with you completely. What we see in terms of time saving is definitely on the back end, where you are dealing with auditors and you're dealing with those reports that you have to do every month or the year. So I completely agree with you.
Great.
So another question that's come in. Understand the volume of changes. Yeah, there's a lot of changes. How do you stay current and keep your product current? So Wolters Kluwer, like I said, we've been doing research for more than 100 years now. We have a complete research department that does research. They make about 1,000 calls a week. They're a staff of about 30 people. So they are well-versed in the ins and outs of trying to get tax rates. So that's how we keep everything current, and we share that information directly with the DMA product on a monthly basis as rates and rules are updated. The other interesting fact about our research department is that Wolters Kluwer has been selected for 10 years running to provide the IRS with tax content. So when you think about filing your tax return and there's a deduction for sales tax, you're getting those rates from us.
That's an excellent point, Corey. Another question is, are there key triggers that prompt an audit? Having been an ex-auditor, I can tell you there's a number of triggers. One is if somebody calls and says, you need to look at this organization because they're not doing things correctly, and believe it or not, that does happen from competitors and others out there. The other trigger is really random and industry specific, and retail overall has been a very strategic target for government agencies because they just have such sheer volume of transactions that a small percentage of error translates into huge revenue for them. So traditionally, I know California had an initiative. They even went out and hired auditors. It was a 3-year plan so that they can audit more retailers, and by retailers, they included e-commerce as well.
Yeah, that's definitely true, Sona. And the other thing that I've seen from my days in public accounting and defending audits, it seems unlikely, but audits can occur if you have fluctuation in your sales volume. So if you are filing a tax return one month with $100,000 of sales, and the next month you file a return with $10,000, the state's going to take notice of that, and they're going to more likely than not want an explanation for it.
Good point.
So another question that came in, do sales tax holidays apply to all retailers in the jurisdiction, or are any retailers exempt? Sales tax holidays apply to any retailer that is selling a good that is deemed to be part of the sales tax holiday. So even if you're a hardware store and you sell notebooks, during a sales tax holiday, those notebooks would be exempt. So the law is written in a way where it exempts certain products. It doesn't say that certain retailers get the sales tax holiday and certain retailers don't. But good question.
Great. I think that might be the end to our questions. Do you see anything else, Corey?
No, I'm not seeing anything else there, Sona.
Well, first of all, I want to thank Retail Pro for coordinating this event for us and allowing us to speak to all of you. We would love to work with some of you in defining how this solution would work with your environment and how it would address your needs. Would love to demo the solution to you if you're interested. We will be sending out this presentation deck after the meeting, so feel free to reach out to us directly. Thank you for your time.